As whispers of economic resurgence dance on the horizon, 2024 seems poised to unlock the potential of small-cap stocks. After navigating choppy waters in 2023, these nimbler businesses have a chance to shine, making the selection of the right small-cap ETF a critical decision. But with a vast ocean of options at your fingertips, pinpointing the ideal fit can feel like traversing a financial Everest. This article serves as your Sherpa, guiding you through the diverse landscape of small-cap ETFs. We'll dissect the key considerations, explore various investment styles, and unveil ETFs primed to capitalize on the potential 2024 bull run. Before embarking on our journey, let's establish the terrain. Small-cap stocks, typically ranging from $300 million to $2 billion in market capitalization, offer higher volatility compared to their larger counterparts. This volatility, however, is a double-edged sword. While prices can fluctuate more dramatically, the potential for explosive growth is proportionally higher. Historically, small caps have outperformed large caps over the long term, making them compelling options for investors seeking significant alpha. Finding the optimal ETF requires careful consideration of several factors. Investment style. Do you lean towards growth companies with boundless future potential, value companies with underappreciated assets, or a strategic blend of both? Index tracked. Different ETFs track diverse small-cap indices, each with its own selection criteria and sector allocations. Popular options include the Russell 2000 for broad exposure and the S&P 600 SmallCap Growth for growth-focused portfolios. Expense ratio. This seemingly small fee eats into your returns over time, so prioritize ETFs with low expense ratios, ideally below 0.5%. Liquidity. Ensure the ETF trades frequently to facilitate seamless buying and selling. With our compass prepped, let's explore some top contenders for 2024. Broad market benchmarks. iShares Russell 2000 ETF, IWM. This titan tracks the Russell 2000 index, offering cost-effective access to the entire U.S. small-cap universe. Expense ratio, 0.18%. Schwab U.S. Small Cap ETF, SCHA. Another broad-based choice, SCHA follows the Dow Jones U.S. Small Cap Total Stock Market Index, with additional exposure to microcap companies. Expense ratio, 0.23%. Growth champions. SPDR S&P 600 Small Cap Growth ETF, SLYG. This ETF targets high-growth companies within the small-cap realm, focusing on technology, healthcare, and consumer discretionary sectors. Expense ratio, 0.45%. VanEck Vector's Morningstar Small Cap Growth ETF, MVPG. MVPG leverages Morningstar's research to identify growth-oriented small caps with strong financial fundamentals. Expense ratio, 0.35%. Value Hunters. WisdomTree U.S. Small Cap Value ETF, VLU. VLU tracks the WisdomTree U.S. Small Cap Value Index, prioritizing undervalued companies with attractive dividend yields. Expense ratio, 0.39%. SPDR Russell 2000 Low Volatility ETF, IWL. This ETF aims for smoother returns by focusing on less volatile small caps while still capturing market upside. Expense ratio, 0.19%. While these established players provide strong options, niche offerings cater to specific interests. Global Alpha U.S. Smaller Companies ETF, GURU. For global diversification, GURU invests in high-quality small caps across developed and emerging markets. Expense ratio, 0.75%. Tematica Research Cybersecurity ETF, THCY. If you believe cybersecurity will be a 2024 growth engine, THCY focuses on small caps driving this critical sector. Expense ratio, 0.68%. It's crucial to remember that historical performance is not always indicative of future results. The market is a dynamic beast, and unforeseen events can disrupt even the best-laid plans. Always conduct your own thorough research, evaluate your risk tolerance, and diversify your portfolio across asset classes. A final note. 2024 holds immense promise for small-cap stocks. By leveraging the insights provided in this article, you can navigate the diverse landscape of ETFs and select those that align with your financial goals and risk tolerance. Remember, investing is a marathon, not a sprint. Patience, discipline, and a long-term perspective are key to unlocking the potential of small-cap ETFs in the year ahead. While broad market ETFs paint a wider picture, sector-specific ETFs allow for targeted exposure to industries poised for growth in 2024. Healthcare. Global X Genomics and Biotechnology ETF, GNOM focuses on small-cap companies pioneering advancements in genomics and biotechnology, a sector expected to continue its momentum. SPDR S&P Biotech ETF, XBI offers a broader exposure to the biotechnology sector, including small-cap companies developing innovative therapies and treatments. Technology. ARK Next Generation Internet ETF, ARKW focuses on companies driving the next wave of Internet innovation, including cloud computing, artificial intelligence, and blockchain technology. First Trust Nasdaq Cybersecurity ETF, CIBR targets cybersecurity companies, a sector with increased demand due to the growing threat of cyber attacks. Financials. Invesco KBW Nasdaq Financial ETF, KBWB invests in small-cap financial companies, which could benefit from rising interest rates and an improving economic outlook. Global X FinTech ETF, FINX focuses on financial technology companies, which are disrupting traditional financial services with innovative solutions. Additional considerations for strategic selection. Active versus passive management. While passive ETFs track an index, active ETFs have fund managers who aim to outperform the market. Consider your preference for management style and associated fees. Tax efficiency. Some ETFs are more tax efficient than others. If tax implications are a concern, prioritize ETFs with lower turnover ratios and tax-efficient structures. Dividend yield. While small caps typically offer lower dividend yields than large caps, some ETFs focus on dividend-paying small-cap companies, providing income along with growth potential. Small-cap ETFs can serve as powerful engines within a diversified portfolio. To construct a resilient strategy, consider blending small-cap ETFs with other asset classes, such as large-cap stocks, bonds, and real estate. This diversification can help mitigate risks and smoothen out returns over time. Remember, the path to financial success is paved with informed decisions and a disciplined approach. By thoroughly evaluating your investment goals, risk tolerance, and the unique characteristics of each ETF, you can select the small-cap champions that align with your financial aspirations in 2024 and beyond.